Hi everyone, this is Emily and I'm a digital transformation consultant with Hyperbots. Really pleased to have John on the call with me, who is the VP of FP&A at Extreme Reach. So today we'd be discussing sales and use tax compliance, which is an area that often goes under the radar but has significant impacts on a company's bottom line and operations. So John, let's quickly dive into the topic and I'd want to kick things off by asking what are some of the compliance risks companies face if incorrect sales or use of tax is charged by vendors?
Yeah, the impact is great, and it goes across like it impacts your customers too. Because if you're not passing it on and you're not registered in the right states and you get changes too, or your vendors are not compliant and then they go through an audit and things like that, then they might start charging you the sales and use tax. It actually happened with one of my clients recently where we had to go in and we had to make sure that the changes in there's a lot of gray areas, which makes it hard to be compliant too and to understand because the rules and regulations are changing, particularly as technology is changing. So with the SaaS environments and things by state and stuff, and whether it's charged or not charged, and is SaaS a service or not a service, those types of things have been up for grabs and everyone's been trying to kind of figure it out. Is it a service or is it not a service? So having it go through AI and be compliant by each state because it's different everywhere makes it very complex.
Understood. Also, John, could you explain why incorrect tax charges lead to cash flow disruptions?
Yeah, so it goes back to, so if you're not compliant and you can get number one penalties, so it can end up more than even the sales tax, and your sales tax rates can be pretty high in some of the states too. In New York, where sales taxes are, closer to 10%. So when you're not compliant and you add that on, and then it's a impact to your customers too, they may not want to continue those services and things, and it also you lose credibility. So and then if you have to pay not only the sales tax and you're liable and you didn't collect it, and then you also have to pay penalties and those things, if you go through an audit, it can be very disruptive to your cash flows.
Understood. So, how do you think tax compliance affects a company's reputation with stakeholders?
Everyone believes that you should know and you should be able to do it, even though they could also assess the sales tax to themselves and use taxes and those types of things. And larger organizations do it, but everyone's trusting everyone basically in this type of environment. So it's critical to be a trusted person or trust if you're a vendor and you're getting payments and you're collecting sales tax and things and someone's not, then it can help you understand, or like maybe I should and things like that. So there's a lot of, if you want to have credibility and be on top and you look very professional if you're doing it correctly.
So, talking a little about best practices, John, what are some of the best practices for ensuring accurate sales and use tax compliance within the organization?
Yeah, there's several key best practices. One is the regular tax reconciliation and invoice reviews. For example, each month we might want to review a sample of invoices, ensure that there's tax calculations are aligned with the latest rules. You could have a program run through that too, because the rules do change, like I said, or there's different cases that go against states or states versus companies and things that kind of change where you might want to be on your collection of sales and use taxes or paying sales and use taxes. Also, quite often, if you are a reseller, you should be tax exempt. So making sure that you have the right exemptions and an exemption certificate so you don't get a surprise tax. And if you're not checking every bill and you're a large organization, you're not going to know necessarily without running it through a program and everything that you're being charged taxes when you're actually tax exempt. So there's a lot of room for error here, and a lot of people and companies overpay for their sales and use taxes.
Got it. So, would you be able to provide examples of automated tools or, let's say, processes that help with tax compliance?
There's different tools within even ERPs that have tax compliance modules and things to make sure. There's also your other add-ons like your TaxJars, Avalara, and things like that that a lot of people use at the smaller level. There's also services by your big accounting firms and things like that that can keep you tax compliant. So it's critical to not only get advice from a software standpoint, but also from a tax professional because of these changes and things. Otherwise, you can end up overpaying if you just go straight by software because it's different. There are gray areas and things that you need to look at the determination a little bit greater. So there's tools that can automate. Hyperbot, if you're invoicing sales in California, Hyperbots can go in and look at and apply California specific rates automatically by using AI to determine that category and invoice items in invoice and zip code. AI automation also reduces the manual intervention and risk of human error. And that's the biggest thing is without a tool like Hyperbots or like some of those other tools that are just strictly for tax, it's hard to stay compliant and things. So it's critical that you're using the right software. I think AI is probably the biggest play here because it can keep up with up to date. And what you find with a lot of the legacy tools that I mentioned is that they're not necessarily up to date and they're relying on your descriptions and how you say what your items are, but that may not
Mhm.
be correct too. So AI can pick up on some of those anomalies in a tool like Hyperbots.
So, John, now that you spoke of AI, can AI help companies keep up with changing tax rates and rules across jurisdictions?
Yeah, so it definitely can. AI can not only look at the rules and regulations and things, but often the rules aren't caught up, like I was going into in the beginning of the discussion with technology and what these things really are that we're selling and the models of how you sell these things. And as things change more and more to subscriptions and things like that, it's which jurisdiction, and if that subscription is used across many jurisdictions, it's how do you pay the taxes and assign the taxes appropriately to those things. So in New York State, it adjusts its tax rates. AI can detect and update our system, so we apply the correct rate for every New York transaction. This is a proactive approach that minimizes the delays. AI can
Mhm.
also, and I'm going to go into a little bit like I was talking about, is if there's a case of a state against a company and things like that, AI could pick up on a ruling that a judge made to say that something's taxable versus not taxable, which could either it could save you money in the long run, at least from the penalty side, but it at least keeps you compliant.
Got it. And just to round the discussion, John, talking a little bit about the challenges. So, what are some of the challenges that companies face when they try and implement an AI for tax compliance?
Yeah, the hard part is that AI doesn't have that thought process yet. So again, requires it's more like an AI assist, and it's
Mhm.
hard to predict the rulings if things have changed. So
Mhm.
for instance, like in Michigan and things, what they call service from a like SaaS perspective has changed this year in 2024, requiring people to companies to collect the sales tax for SaaS in Michigan if you're selling there. So things like that, it has to keep on, but those aren't necessarily written in the rules. So that's the challenge is it could be just that a lot of these things aren't written very vague. So it's hard to stay compliant and to interpret what the meaning is of the law, but it comes down to often rulings in court and things like that that you end up having to be compliant.
Understood. Thank you so much, John, for sharing these insights. It's pretty clear that accurate tax compliance is vital for financial stability, and AI offers exciting possibilities to make this process more efficient and error-proof. I really appreciate your time and expertise. So thank you.
No problem. Thank you for having me.